Right. Welcome back, everyone. Today we're going to do a deep dive into the stock market. We've got two great sources to help us out with that. First up, we've got a nice beginner-friendly Udemy blog post that kind of breaks down the basic stock market concepts, all the terms and stuff. And then we've got a recent Edward Jones weekly market update report. This one gets a little more into the details. It gives a pretty good analysis of the current economic conditions. They're really focusing on Q4 of 2024 and then, overall how the market did in 2024. So are you ready to kind of decode Wall Street, figure out all the jargon, and see if those magnificent seven companies, those big tech companies, if they're really all they're cracked up to be? Yeah. So I think that Udemy post is actually a really good place to start. It's like a good reminder of how companies actually get money, right? It's not like they just magically have it to, build new factories or launch products. So there's a couple of ways they can go about getting that money. One way is they can sell stock. That's what's called equity financing. Or they can take out loans. And that's called debt financing.
Yeah, and the interesting thing is that each method has a different kind of impact on the company.
Right.
So with debt financing, obviously they have to pay that loan back with interest. And that can kind of eat into their profits, right? But with equity financing, they're basically giving up a piece of ownership in exchange for that capital.
Right. And that piece of ownership is what we call a stock, right? So when you buy a stock, you're betting on that company's future success, right?
Yeah.
You're hoping that their value is going to go up.
Exactly. And the price of a stock is, it's constantly fluctuating, right? Based on a whole lot of things. But one of the kind of fundamental drivers is this whole supply and demand thing, right? So if more people want to buy a certain stock, that demand goes up, and generally the price is going to follow suit. And conversely, if people start selling a stock, driving up the supply, the price tends to drop.
Right. Okay, so that's kind of the really basic idea there. But let's zoom out a little bit and look at the bigger economic picture. How's the overall economy doing? Because that obviously has a huge impact on the stock market. And this Edward Jones report actually gives a pretty positive outlook for the U.S. economy.
Right. It does. Yeah, it actually highlighted that the U.S. economy grew by a solid 2.3% in the fourth quarter of 2024.
That's pretty impressive, especially, you hear so much doom and gloom sometimes in the news these days. What was driving that growth? What was kind of the main factor there?
Well, they point to consumer spending as kind of a key factor. It seems that despite, inflation worries, economic uncertainty, people were still buying goods and services. And that fueled a good chunk of that growth. And what's even more kind of interesting is that a significant portion of this spending was on durable goods, things like cars, appliances. And that suggests that consumers are feeling, confident enough in their financial situations to, make these larger purchases.
Yeah. And I would imagine that a healthy job market plays into that.
Right.
More people employed, more money kind of flowing through the economy. Does the report touch on, unemployment rates at all?
It does, yeah. The report highlights that the labor market remains strong. Unemployment rates are, hovering near historic lows. And this abundance of jobs likely played a role in bolstering consumer confidence and subsequently consumer spending.
Right. So it sounds like we're kind of in this positive feedback loop, right? Strong job market leads to higher consumer spending, which further boosts the economy.
Exactly. And this ties directly back to the stock market, When the economy is perceived as healthy, investors tend to be more optimistic. And that can drive up stock prices.
Yeah, that makes sense. Okay, so that's kind of the macro view. But what about some specific companies? So the Edward Jones report really focuses on what they call the Magnificent Seven. These are those, powerhouse tech giants,
the
ones that everybody's always talking about. How are they performing?
Well, it's kind of a mixed bag, actually. Apple, Microsoft, and Meta, they all exceeded expectations for the last quarter, which, not surprising given their track record and their dominant positions in their respective markets. But there's one notable exception, Tesla.
Oh, really? Tesla missed the mark. I thought they were unstoppable. What happened there?
Yeah, so they missed earnings and revenue projections, which on the surface might seem like bad news. But what's fascinating is that their stock price actually went up after the announcement.
Wait, what? How does it even make sense? Like, if they didn't perform as well as expected, shouldn't their stock have gone down?
Yeah, it's pretty interesting, right? So it seems that investors are kind of looking beyond those immediate numbers, right? And they're focusing more on Tesla's long-term potential.
Yeah.
They're betting on the company's future plans, which include, new, more affordable electric vehicle models, advancements in autonomous driving technology. and even this potential of a, robo-taxi network.
Wow. So even though they kind of stumbled a bit in the short term, investors are still incredibly bullish on their long-term prospects.
Exactly. I think it's a testament to Tesla's brand power
Right.
and, Elon Musk's ability to kind of generate excitement and attract investment, even when, the company faces setbacks.
Yeah. That is pretty wild. It seems like, the stock market is as much about psychology and perception as it is about those hard numbers, right?
Absolutely. Investor sentiment plays a huge role in driving market movements. And sometimes that sentiment can be driven by factors that go beyond, current financial performance.
Right. Okay. I'm starting to get a sense of how complex this all is.
Yeah. And it gets even more interesting when we start to factor in the emergence of new players that are challenging those
Yeah.
established giants, right? And the Edward Jones report actually touches on a Chinese AI startup called DeepSeek that's kind of making waves in the tech world.
DeepSeek. Okay. Tell me more.
Yeah.
How are they shaking things up?
Well, so they developed an AI model, and it rivals those of, those big U.S. tech giants like Google and Apple in terms of capability. But what's really turning heads is that they reportedly developed this model
Yeah.
at a fraction of the cost and with significantly less computing power than what their American counterparts have invested.
Wow. That's impressive. Are they basically suggesting that these big U.S. tech companies are overspending on AI development?
I think it's raising some questions about efficiency and spending priorities. DeepSeek's accomplishment kind of challenges this assumption
Hmm.
that you need these massive budgets and computing resources to make breakthroughs in AI.
Right. Yeah, that's a really good point. So it sounds like DeepSeek is really coming in as this kind of underdog, right? And
Yeah.
they're showing that innovation can really happen anywhere,
Yeah.
even with maybe fewer resources. I mean, that's going to be a wake up call for some of these tech giants, right?
It definitely throws a wrench into this narrative that Silicon Valley has this, monopoly on groundbreaking AI.
Right. And what's even more interesting, and the report touches on this, is that DeepSeek is actually going open source with their AI model.
Hmm.
Do you want to talk a little bit about that?
Yeah, I mean, they're making their code publicly available,
Hmm.
which is a huge departure from, the typically secretive nature of AI development,
Right.
especially within these large tech companies. This open source approach. It could lead to a much faster pace of innovation as, developers around the world can now leverage DeepSeek's work to build upon and create their own applications.
So instead of hoarding their technology, they're putting it out there for everyone to use and improve. Yeah. I mean, that's a pretty bold move,
Yeah.
especially in such a competitive field, right?
It is, and it has the potential to, disrupt that entire AI landscape. I mean, think about it. Smaller companies, startups, even individual researchers, now they have access to sophisticated AI technology that was previously, out of reach. This could lead to just a surge in new AI-powered products and services, potentially benefiting, consumers and businesses alike.
Yeah. Okay, so DeepSeek is definitely one to watch, but let's bring it back to the stock market itself for a moment. We know the Federal Reserve, the Fed, plays a big role in setting interest rates. How do their decisions actually impact, what happens in the market?
Yeah, so the Fed's actions have this ripple effect, right, throughout the entire financial system, and the stock market is right there in the splash zone. So when the Fed raises interest rates, it becomes more expensive for companies to borrow money, right?
Mm.
And this can slow down their growth, potentially lead to lower profits, which can then make their stock less appealing to investors.
So higher interest rates generally translate to lower stock prices.
It's not always a direct correlation, but that's the general trend. Conversely, when the Fed lowers interest rates, it becomes cheaper for companies to borrow money, which can then stimulate economic activity
Mm.
and potentially boost stock prices.
Right, right. So what's the Fed up to these days? The Edward Jones report, I think, mentioned something about them hitting the
Right.
pause button.
Yeah, they did. In January 2025, the Fed decided to hold interest rates steady after a series of increases.
Interesting. What do you think is the reason for that pause?
Well, it's likely due to a combination of factors. The Fed is always trying to strike this delicate balance, right, between curbing inflation and supporting economic growth. And remember how we talked about consumer spending being a key driver
Mm.
of, recent economic growth? Well, if the Fed raises rates too aggressively, it could dampen consumer spending and potentially, tip the economy into a recession.
Ah, so they're kind of playing it safe for now, trying to find that sweet spot where they can bring inflation down without causing too much disruption to to the economy.
Exactly. It's a bit of a high wire act.
Yeah.
And to add another layer of complexity, the report also mentions the Fed's ongoing efforts to reduce its balance sheet, a process known as quantitative tightening.
Quantitative tightening, or QT, as the cool kids call it. Could you break that down for us a little bit? What does that actually mean?
Yeah. Yeah, so essentially during the pandemic, the Fed bought a lot of bonds to inject money into the economy and keep things stable. Quantitative tightening is the process of reversing that. So they're essentially selling off those bonds, which has the effect of pulling money out of the economy.
Okay. And how does this impact the stock market?
Well, when there's less money sloshing around, it can make it harder for companies to access capital, which can potentially impact their growth and ultimately their stock prices.
Okay. So the Fed's dance with interest rates and this quantitative tightening thing are all kind of part of this big economic puzzle that influences the stock market. It's starting to make a little more sense now.
It's definitely all interconnected. And as you can see, the stock market isn't just about, picking individual companies and hoping they go up in value. It's about understanding that broader economic landscape, the forces that kind of shape it, and how those forces can impact, your investment decisions.
Right. It's like we've been zooming in and out.
Yeah.
Right. Looking at the stock market through all these different lenses.
Yes.
From those, individual companies to the overall economy.
Exactly. And that's what makes this deep dive so valuable. It's not just about giving you, stock tips or telling you what to buy. It's about equipping you with the knowledge and the tools to think critically about the market and make informed decisions based on your own understanding.
Right. Yeah. Okay, so we've talked about the fundamentals of the stock market, the impact of the economy, and the Fed's role in kind of shaping things. We've also seen how these new players like DeepSeek are kind of shaking things up, challenging the established giants.
And we've learned that the stock market is really this dynamic and complex system, influenced by a myriad of factors, from consumer behavior to technological advancements to government policies.
Right, right. But let's not forget about those Magnificent Seven companies that we talked about earlier. Are they still, the kings of the hill?
Yeah.
Or are they starting to show some signs of weakness?
I think that's the question on everyone's mind, isn't it? They still hold immense influence, of course, and they have a proven track record of success, but the landscape is definitely shifting.
Okay, what makes you say that?
Well, Tesla's recent earnings miss, despite, investors' continued optimism. It suggests that even these giants aren't immune to challenges, right? And the emergence of DeepSeek, for example. It highlights that innovation is no longer confined to Silicon Valley. The playing field is kind of leveling. And that creates both opportunities and risks for investors.
So you're suggesting that the Magnificent Seven might not be so magnificent in the future?
Well, I'm not saying that they're going to disappear overnight, right?
Right.
They still have tremendous resources and brand power, but their dominance is being challenged. And,
Right.
and investors are starting to look beyond these traditional tech behemoths for growth opportunities.
Right. That makes sense. It's like any industry, right? New players emerge, they disrupt the status quo, and they force those, established leaders to adapt or risk being left behind.
Precisely. And this constant evolution is what makes the stock market so dynamic and so unpredictable. It's a constant dance between innovation, competition, and investor sentiment.
So it sounds like things are getting really interesting in the tech world. I mean, it makes you wonder if those Magnificent Seven companies are really, as invincible as they once seemed. What are your thoughts on that?
Well, I think that's a great question. And I think it's something that investors are grappling with right now. These companies have built empires on innovation and disruption, but now they're facing, a new wave of disruptors themselves. I think the key question is whether they can adapt and evolve to stay ahead of the curve, or if they'll become, victims of their own success.
Right. It's like a classic David and Goliath story, right? Playing out in the tech world, except there are multiple Davids now, right?
Yeah.
Slinging their stones.
Exactly.
Yeah.
And that's what makes this whole landscape, so exciting. It's no longer a foregone conclusion that the biggest players are always going to dominate. There's more room for new entrants, new ideas, new approaches to shake things up.
Right. Okay, I have to ask, with all this talk about the Fed, quantitative tightening,
Yeah.
and these tech giants potentially losing their grip, is this a good time to be investing in the stock market? Like what advice would you give someone who's, maybe just starting out? or feeling a bit uncertain about all of this?
That's a question that only you can answer for yourself, right? Based on your individual financial situation, goals, and risk tolerance. But I think the key takeaway from all of this is that the stock market is constantly evolving, right? It's not a get-rich-quick scheme. It's a long game that requires patience, research, and a willingness to adapt to changing conditions.
So don't just jump in blindly, right? Chasing the latest trends or hot stocks. Do your homework, understand the fundamentals, and think long term.
Exactly. And don't be afraid to seek advice from, a financial professional who can help you create a personalized investment strategy that aligns with, your goals and risk tolerance. There's also some great resources out there, for beginners. Remember that Udemy blog post we discussed earlier? That's a fantastic starting point for understanding those basics of the stock market.
Yes. And the Edward Jones Weekly Market Update we've been referencing, throughout this whole deep dive,
Yeah.
it provides a lot of really valuable insights into that current economic landscape
Yeah.
and how it's shaping the market. We'll make sure to include links to both of those resources in the show notes, for anyone who wants to explore further.
Excellent. And remember, even if you're not, actively trading stocks, understanding how the stock market works is essential for anyone who wants to be, financially savvy. It's a crucial part of our overall economy, and it impacts all of us in one way or another.
Absolutely. Okay, so before we wrap up this deep dive, let's bring it back to that initial question we posed, right? Are those magnificent 7 tech companies still living up to the hype? What's your final verdict?
Well, it's safe to say that their dominance is being challenged in ways we haven't seen before. The emergence of new players like DeepSeek, combined with, the evolving economic landscape and the Fed's, delicate balancing act creates a lot of uncertainty. However, these companies are still incredibly powerful and innovative. It will be fascinating to see how they adapt and evolve in the face of these, new challenges.
So the Magnificent Seven might not be quite as magnificent as they once were.
Yeah.
But they're definitely not going down without a fight. It sounds like the tech world is in for a pretty exciting ride in the coming years.
Absolutely. The pace of innovation is accelerating, and the lines between industries are blurring. We're seeing AI becoming integrated into everything from healthcare to transportation to finance. It's a truly transformative time, and the companies that can harness the power of these technologies will be the ones that shape the future.
Okay, this deep dive has given me a lot to think about. I'm starting to see the stock market not just as, a way to make money, but as this complex ecosystem that reflects the trends, innovations, and anxieties of our time. It's pretty fascinating when you look at it that way.
It is, and it's a constant reminder that knowledge is power. The more you understand about the forces that shape the market, the better equipped you are to make informed decisions, whether you're, a seasoned investor or just, starting to dip your toes into the world of finance.
Well said. I think our listeners are walking away from this deep dive with much deeper understanding of the stock market, its complexities, and its impact on all of us. Any final words of wisdom before we sign off?
Stay curious, keep learning, and don't be afraid to challenge your assumptions. The market is always changing, and the best investors are the ones who are constantly adapting and evolving their strategies.
Great advice. And remember, you can find links to the Udemy blog post and the Edward Jones Weekly Market Update in our show notes. Those resources will give you a solid foundation for understanding the topics we've covered today.
Absolutely. And we encourage you to, continue exploring these topics on your own. The world of finance is full of, fascinating insights and opportunities for those who are willing to dig a little deeper.
Well, that's all the time we have for today's deep dive. Thanks for joining us on this journey through the stock market. Until next time, keep those brains engaged and stay curious. So the Magnificent Seven might not be quite as magnificent as they once were, but they're definitely not going down without a fight. It sounds like the tech world is in for a pretty exciting ride in the coming years.
Absolutely. The pace of innovation is accelerating, and the lines between industries are blurring. We're
Yeah.
seeing AI becoming integrated into everything from healthcare to transportation to finance. It's a truly transformative time. And the companies that can harness the power of these technologies will be the ones that shape the future.
Okay, this deep dive has given me a lot to think about. I'm starting to see the stock market not just as, a way to make money, but as this complex ecosystem Yeah. That reflects the trends, innovations, and anxieties of our time.
Yeah.
It's pretty fascinating when you look at it that way.
It is, and it's a constant reminder that knowledge is power. The more you understand about the forces that shape the market, the better equipped you are to make informed decisions. Whether you're, a seasoned investor or just, starting to dip your toes into the world of finance.
Well said. I think our listeners are walking away from this deep dive with much deeper understanding of the stock market, its complexities, and its impact on all of us. Any final words of wisdom before we sign off?
Stay curious, keep learning, and don't be afraid to challenge your assumptions. The market is always changing, and the best investors are the ones who are constantly adapting and evolving their strategies.
Great advice. And remember, you can find links to the Udemy blog post
Hmm.
and the Edward Jones Weekly Market Update
Ah,
in our show notes. Those resources will give you a solid foundation for understanding the topics we've covered today.
absolutely. And we encourage you to, continue exploring these topics on your own. The world of finance is full of, fascinating insights and opportunities for those who are willing to dig a little deeper.
Well, that's all the time we have for today's deep dive.
Mm.
Thanks for joining us on this journey through the stock market. Until next time, keep those brains engaged and stay curious. So the Magnificent Seven might not be quite as magnificent as they once were, but they're not going down without a fight. Sounds like the tech world is in for an exciting ride in the coming years.
Absolutely. The pace of innovation is accelerating and the lines between industries are blurring. We're seeing AI being integrated into everything from healthcare to transportation to finance. It's truly a transformative time, and the companies that can harness the power of these technologies will be the ones that shape the future.
This deep dive has given me a lot to think about. I'm starting to see the stock market not just as a way to make money, but as this complex ecosystem that reflects the trends, innovations, and anxieties of our time. It's pretty fascinating when you look at it that way.
It is, and it's a constant reminder that knowledge is power. The
Mhm.
more you understand about the forces that shape the market, the better equipped you are to make informed decisions, whether you're a seasoned investor or just starting to dip your toes into the world of finance.
Well said. I think our listeners are walking away from this deep dive with a much deeper understanding of the stock market, its complexities, and its impact on all of us. Any final words of wisdom before we sign off?
Stay curious, keep learning, and don't be afraid to challenge your assumptions. The market is always changing, and the best investors are the ones who are constantly adapting and evolving their strategies.
Great advice. And remember, you can find links to the Udemy blog post and the Edward Jones Weekly Market Update in our show notes. Those resources will give you a solid foundation for understanding the topics we've covered today.
Absolutely. And we encourage you to continue exploring these topics on your own. The world of finance is full of fascinating insights and opportunities for those who are willing to dig a little deeper.
Well, that's all the time we have for today's deep dive. Thanks for joining us on this journey through the stock market. Until next time, keep those brains engaged and stay curious.
Happy investing!